Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, April 14th. We're also going to do our midweek review. Let's quickly jump to our news items for this week. As we stated earlier this week and on Monday, loaded with information, with reports that are really critical to the health of the economy, including the CPI, which we had yesterday. Today we're starting off with crude inventories at 10:30, and we also have the Fed chair speaking at noon. Now, normally when we have these days, they're very similar to Fed days, so the market may be very busy, probably the first half hour, maybe first hour, and then you're going to see it start getting slower and slower, as progressively slower as we get towards the noon hour. So keep your eyes open for that. And of course, tomorrow we go on with retail sales, the Philly Fed manufacturing, unemployment claims, really important number, and of course our prelim UOM consumer sentiment, which we're expecting to come in at 88.9 on Friday, right at 10 o'clock in the morning. Now, the markets continue to establish new record highs. I think yesterday we established our 21st in 2021. This time fueled by profits from banks, particularly JP Morgan, having a record year. So bank stocks are continuing to recover. And here we have same pattern, guys. Very low volume, very low volume. We're well below our average volume of 1.1, which is what we're expecting to see in order to have a good moving market. And our ATR continues to plummet at 46. In other words, the ranges are getting smaller, the volume is getting smaller. So it's getting real difficult to find good positions in this market simply because of the lack of movement in this type of market. A lot of grindy. So the idea here is to wait for compressions or for breakouts out of key areas, and we'll show you some of those this morning. Projections coming up. I just did a Fibonacci extension from this run to this retracement here, and the two projected levels that I have coming in the future are 42.63. We'll see if and when we get there, and 43.67, which seems absolutely an incredible number out here. But remember here, early February, we were down, we were right around the 3,900. And then probably 2 months, in 2 months, we're up over almost 100 points, so almost 200 points. So it's possible that we can do this before the end of the year. We'll see how it goes. Again, there's still a lot of unanswered questions coming from Washington, and I know the market is still a little bit nervous about what's going to be coming near the future in reference to the economy. But let's go back to one of our another time frames here to give us another deeper look into what's happening behind these numbers. Again, here's the pattern, guys. If you're looking for a pattern, here's your pattern. There's our run. There's your consolidation, and all these consolidations are based on all-time highs. There's our break. There's our return to our previous high. Market rallies, establishes a new high, comes back, retraces, touches it again, can't make it through, clearly break through it. There we go again, more consolidation between two areas of prices previously established. Here's our break, break, return back, use it as support, and we launch again. All of these blue lines you've seen here are previous all-time highs, and we've had the same effect over and over and over and over again. So as far as an overall general pattern of the market, this is what we have. This is what we're looking at right here. Look how much closer you can look at it in this particular time frame analysis chart, and here it is again. How many days in a row have we opened up with an all-time high, either in the pre-market or an all-time high established late in the trading session? And of course, here we go. Here's the compression that I was talking to you about before. Here's the compression. So what am I looking for here? I'm looking for a break right here. I'm looking for a clear break above this trend line to the downside. Now remember, these trend lines that we establish here, these are not based on just picking up pivots at random. These are based on price action and a set of combination of indicators that we use in order to establish objective areas. So in other words, as long as these lines are here, anything below that we're selling, anything above that we're buying the rally. So here we go. Here's our first rally above this line. Here's one of our trades. Here's another one of our trades. Here's another one of our trades. As now we're establishing a trend line to the upside. See, so now this is our trend line to the upside. We're buying this market on these dips. On these dips, we're just buying this market. We're just going to keep buying this market. Any break below this here, now we're expecting the market to potentially come back, retest, and come retest this support level here. So there's your run. There's your top. which is the intraday high that we established yesterday's session. Here is currently what we consider our floor after the run. There's our top, there's our bottom, and there's where we are right now. So that's what we're looking for today. Be careful with these kind of markets. Be very patient. Trades are going to take long to form, and they're going to take long to develop. So be patient and play the market according to your plan and trade your plan. Take care. Have a great session.